Welcome to India Revival Mission Grand Finale. We have a very special guest with us. We have with us our partner who has done this journey with us together, Mr. Mallikarjuna Rao from Punjab National Bank. Sir, thank you so much for joining us, and it's a pleasure having you on this show. As you know, we are in the final leg of India Revival Mission Grand Finale. How would you reflect on this journey? Because I think we were the first ones to actually start talking about India's revival when others were still busy trying to figure out how bad things could get for the economy. I remember you were one of the first ones to actually predict that the economy could be faster than what people were anticipating at that point in time. So how do you reflect on that period now when you look back?
The pandemic impact was receding, and the lockdown was also getting to be lifted by August, September. So, and the festive season was starting from October onwards. There was a visibility for the pent-up demand. We have seen in the month of July, the automobile industry indicating that their sales have increased compared to the earlier months. And we have also seen that there has been an increase in the demand for a housing loan segment and vehicle loan segment. So these are the main reasons why I thought the pent-up demand would definitely drive the recovery more effective than it has been anticipated. And we have seen that in the last 6 months, almost up to March from October, the demand has been much better. It is good, and we are seeing that the effect of growth in the economy will be much more pronounced and visible in the year 21-22.
Right. So you were actually, I remember you were the first one to stick your neck out at that point in time and predict that even the annual GDP number could look better than expected. Now, obviously, we are at the fag end of Q4 also. And you have seen the recovery, which I think partly was driven by the pent-up demand, but also by other factors like the broad-based recovery that we have seen. Currently, now, what is your outlook?
See, look, even in the economy, GDP growth as well, at the end of Q1, it was minus 23, which appeared to be really gloomy in terms of anticipation for the future. However, in the macro and microeconomic scenario, when you look at the human behavior, not necessarily will reflect in terms of mathematical computation. That is what we have seen. And in the Q2 at the end, when the GDP growth has come down from minus 23 odd to minus 7.5, it was clearly visible that the growth would be much better than anticipated. Similarly, we have seen in Q3 and it is positive at 0.4. And everybody is anticipating that the overall GDP growth could be negative at around 7% by year 21 March. So the visibility is there with respect to the growth in various sectors. There are only very few sectors probably which may take little amount of time, like hospitality industry, aviation industry and tourism industry. Otherwise, in all other segments, we have seen good amount of growth. There is a good spirit in among the entrepreneurs of our country to come back to normalcy on a faster pace. During this period, the decisions taken by Government of India are really laudable, right from Atmanirbhar Bharat package, what they have announced, by creating money in the hands of the people to create a demand for consumer goods or for the daily requirements. Since then, even the government backed emergency line of credit given to MSME people, and even the partial credit guarantee, investment in bonds, all these factors have contributed to create relief to the MSME sector and industrial sector who were reeling under the pandemic. Then to cap with, Reserve Bank of India has also continuously through the credit policy have reduced the policy rates. Up to August, they have reduced more than 175 basis points, which also contributed to create a wonderful opportunity for lending at a lower price, and the lending rates also have come down. Simultaneously, Reserve Bank of India has created good amount of liquidity. More than 7 trillion almost was available till 1.5 months back in the market, which has been useful in extending the credit wherever there is a requirement. Now the culmination was the declaration of budget by the Honorable Finance Minister, where we have seen good amount of allocation for infra investments in terms of road sector, in terms of aviation sector, and also in terms of the port sector. When the investments from the public domain were not, that is corporate sector, were not coming very high in spite of tax reforms declared effective from 1st of October 2019, it is the right time for government to show an intent to invest from the public spending. These are all good measures because when economy is reeling because of the pandemic, not only in our country but across the globe, special measures are required to take care of these requirements. So these measures will go a long way in restoring the confidence in terms of growth in the economy. That is the reason why you see the prediction by the IMF and other world bodies for the GDP growth in India to be anything little over 11 or 12% because the base level has gone down negatively by March 2021. So we expect that the growth would be much better than that, and there is already an impetus created in the economy by way of various other measures, to name very few. One is productivity linked incentive, which will go a long way in protecting the cost of sales of various manufacturing industries in order to compete in the global market.
Right. I remember, in fact, I want to go back to the IRM survey that we conducted and the white paper which we prepared basis the survey. Now, like you rightly said, the central government through Atmanirbhar Bharat and the PLI schemes, RBI, and then again government through budget, they have announced various measures. One of the key highlights of the white paper of India Revival Mission was actually the whole push on manufacturing, and that too especially focusing on the low skilled manufacturing and creating opportunities over there. What is your sense? What is your estimate and assessment of this recommendation?
No, it is a very, very important one because the low skilled manufacturing, when we concentrate and create focus on that, there are two advantages. One is the output will increase. Second, you are also simultaneously creating an employment. In our country particularly, when you have seen a developing economy requires continuous measures to create employment. That is on one side. On the other side is because of pandemic, we have seen employment got impacted, whether it is a construction workers, unorganized sector or organized sector. We have seen that there has been stress on the employment. Now it is very important for any measures to be taken by government or even other stakeholders to create an environment where the increase in employment is created while providing impetus for the manufacturing. So that is how the low skilled manufacturing which can create more employment is a very critical dimension which we have to concentrate in our country, and rightly so. In your document white paper you have given a very good importance to that aspect, which is very critical in the current environment for our country.
Right. Sir, now coming back to the economic revival, looking at the demand so far or the data so far, can you just explain how this revival has played out on the credit offtake front?
See, if you look at the demand as on today, the demand has been mostly in the personal loan segment, housing loan segment, vehicle loan segment. These are all the major areas what we have seen. NBFCs also have come forward since they have also come out of the initial issues because of pandemic, and there are various government agencies as well who are taking the funding. If you look at the credit growth as recently declared by Reserve Bank of India, the credit growth for the scheduled commercial banks has touched now 6.7%, and the expectation could be a little over 8% by March 2021. If you compare with the negative growth sometime in the beginning of the pandemic and later on whatever slowly growth has picked up, it is a good dimension that credit is expected to grow anything around 8% by March 2021. However, if you look at a little more granular data and understand which are the sectors who have created what you call demand for this credit offtake, there has not been a big major chunk in the corporate sector. Now, because of the measures taken, there has been a confidence build-up in the corporate sector. There are a good amount of demand coming towards cement industry, pharmaceutical industry, steel industry. So this will create a further intent on the part of the corporate sector to invest in the days to come. So the investments by the corporate sector will be more pronounced and visible during the year 21-22, which we have not seen as of now. As of now, what we have seen is the pent-up demand as well as sustained demand in terms of the retail, personal loans, housing loans, vehicle loans, and various other goods, impacting even creating a good amount of demand for the MSME segment as well. But the corporate demand I am expecting to come from 21-22 onwards.
There is almost a belief that we have seen recently spike in the COVID cases once again, unfortunately. It may not be right to call it a second wave as of now, because we are much less than half of what we were at the peak in terms of daily number of cases. But are you concerned about this? Because looking at the global behavior, we'll have to wait for a couple of more weeks to actually see if there is a possibility of second wave. What is your take on that?
It is difficult for me to conclude, but I would like to say that it should not be, or it will not be, a second wave. For that, I'll give you a couple of reasons. One is the impact of vaccination in our country is gaining momentum, and every day large number of doses are being imparted for the vaccination. That is one dimension to create a confidence boosting measure, and also creating some element of visibility for the entire population of our country, even though it is very high, that the vaccination will be covering them over a period of time. Second, generally the immunity levels of the population in our country are much better than the other countries. If you have seen based on the mortality ratio in terms of this vaccination, the deaths have been, in compared to the population, in comparison to the number of cases, has been very low. In the same way, if you compare with the global population. So these are all the factors where I can say that India will not be impacted, but not to say global will be impacted, because these are all the cases which are coming up after some element of leisure created because people thinking that pandemic has completely gone down. So there is no problem for them to move forward and behave as if normally they were doing. These are couple of reasons where sporadically the cases started coming up, which has become a good number now across the globe in various areas. But I don't think it can become a second wave of pandemic. There are enough checks and balances which every country, and including our country, are putting in place. If required, some measures, stringent measures also will be taken by the respective state governments, what we are seeing. So I see positivity that with the vaccine coming up and coverage happening rapidly, I don't look at any reason why there should be a second vertical wave. We need to look positively, and it will be probably in a few days' time, things will be all right.
Right. So there is a reason to believe that the demand that we have seen on the retail side, that is likely to sustain, and the corporate demand, which you expect to actually grow in the next financial year or come up in the next financial year, is there to stay for a couple of years?
It will definitely stay for even more than 3 years. The reason is infrastructure investment impetus created by the government. In the road segment, aviation and port industry, the investments will happen over a period of time, starting from 21-22. These are all long-term, long gestation period infrastructure projects. So the lending initially will happen anything between 3 to 5 years. So this will drive definitely the credit growth in the next 3 to 5 years.
Right. Now, sir, coming back to budget, this time actually we have seen a very meaningful allocation and an intent on a couple of very critical sectors, and probably some of it was realization post-pandemic. But we have seen major focus on healthcare infrastructure. We have seen major focus and attention on education sector. There is a new education policy also, obviously, which is rolling out. What is your take on these two sectors? Because end of the day, they are the ones which will create a sustained revival in the economy.
No, it is very critical. The reason is, if you remember, even prior to pandemic as well, the government of India has introduced Pradhan Mantri Jeevan Jyoti Bima Yojana and Suraksha Bima Yojana, particularly related to, one is healthcare, another is life insurance. These two are so critical that a country of our size with so much of population, the awareness related to necessity of an insurance policy has not been felt very high. As a result, the low premium based two products were introduced by government in order to push very effectively so that people have an awareness in terms of the requirement of insurance policy. Today, earlier days, what they used to feel is the money what they earn is required for their sustenance of living rather than thinking of any insurance policy. Now, that kind of a measure taken by the government prior to pandemic and the impact of pandemic have brought about tremendous amount of awareness in among every member of the citizen of our country. As a result, there is a enhanced requirement from their perspective in terms of health insurance as well as life insurance. So in those areas, the government of India, through the budget, creating major impetus, major decision and allocation for the health sector is really appreciable, which is a very important thing. In any economy, emerging economy, the two fundamental requirements are the labor channelized properly for employment, second, their health, and the third dimension is education. So I think now the government has really brought about these three areas into the forefront One is creating an employment opportunities for the people. Second, taking care of their health by way of a good amount of allocation. And third, creating avenues for better education so that they'll become better citizens in the days to come, not only for their earning but also becoming responsible citizens in our country. So these three are very important, and government has appropriately given importance. And I'm sure these kind of things are not related to only 1 year budget. They are all even they can create impact on a long-term horizon as well. So many of the measures, if you look at in the current budget, though the budget is applicable for 1 year, but these measures are going to play down over a period of time in the next 3 to 5 years.
Absolutely. Now coming back to India Revival Mission, we played our part as a media in terms of creating the right focus, I would say, or creating the right lens to look at the revival. But I think I must congratulate you, because the PSU banks, I think, played the most crucial role in terms of not only getting the economy back on track, executing various government schemes, ensuring the disbursal of right relief which government had announced, and keeping this whole banking machinery moving. Probably there is not much discussed about it, but in many countries, even developed countries, we did see the banking system coming under huge strain during the early phase of pandemic. What are the key reasons for that, and how would you reflect on that?
See, if you look at even prior to pandemic as well, the government of India was very conscious of the contribution of public sector space in our country, particularly when the infrastructure lending has happened between 2007 and 2012 in a very large manner. It was the contribution of public sector banks. So as a result, when during the period of asset quality review undertaken by the Reserve Bank of India, when the banks were passing through tough time in terms of the capital requirement, the government has come forward from November 2017 onwards. More than 3 lakh crore was infused by them, and very few could go to even market and get the capital. So it was a very unflinching commitment by the government of India to protect the existence of public sector space, because they have shown their contribution to the nation building exercise. Now coming to the pandemic position, even post pandemic, when government has come out with various measures, the banks have come forward in extending the facilities to all the customers. In fact, in the years 2018, 19 and 19, 20, we have seen better performance from all the public sector banks, as many of them have started booking profits, and many of the banks which were under PCA, prompt corrective action by RBI, as high as 11 has come down to 3 or 4, because slowly one or the other on better performance has been lifted out of the PCA. So we have seen better performance from the PSB profile right from 18, 19 and 19, 20. The pandemic has aggravated little amount of impact not only on overall economy but also on the banks. However, banks have come forward with commitment not only in working under the pandemic circumstances, but also extending the additional facility under the government guarantee to MSME sectors. And when the demand started coming from October onwards, the banks have come forward in lending to meet the pent-up demand. So it has been a roller coaster ride for the last 1 year. If you look at a lot of challenges in front of all of us. However, we have seen that all the stakeholders have seen, including Government of India and banks and all the people from healthcare industry, they have seen that the economy is brought on back, created confidence among the every citizen of our country. Now coming to the contribution by Times Group, I really appreciate and congratulate you for publishing a white paper and handing over to Finance Minister with respect to India Revival Mission. I really appreciate once again, because you have taken this call much earlier than expected, immediately after the pandemic impact was getting created on the entire country. Besides, you have also covered critical areas which are going to be the future harbingers for growth and requirements in terms of employment, and then low skill development which is required. So on that note, the good initiative taken by Times Group, and this is clearly visible when Honorable Finance Minister, when the white paper was submitted, has indicated that every line of the entire report will be seen by them and acted upon by them. Right.
In fact, sir, that was my last question, but your concluding thoughts, because while we might have submitted the white paper, but we are committed to the mission of reviving India and taking it to its true potential of double-digit growth and sustaining it there. So your concluding remarks on that.
No, we are also looking for a wonderful opportunity. The credit growth has been very topsy-turvy in the last 1 year. Initially, it was low, but then it has gone in a better manner as per the details given by RBI. Our credit growth in PNB has been very subdued. We are expecting the growth to be much better pronounced in the year 21-22, and we are expecting anything around 8 to 10% of credit growth, because when the economy grows in GDP at 11%, up to 1.25 times of the GDP growth, the credit can grow. So credit growth for the scheduled commercial banks could be anything between 10 to 12%, and we are moderately anticipating that our growth should not be lower than 8%, or it could be around 10%. Opportunities definitely will be coming. Already it is visible. Various industries are coming. Only some of the industries which are labor intensive may take little time than those which are dependent on technology, leaving few sectors like hospitality, then aviation and tourism. All other sectors will come. Even in aviation, I'm seeing that a lot of improvement is there, because recently the conditions what government has put in terms of the pricing also has been lifted. So overall, it is a good positive indication for all of us, and I'm expecting that the growth will be much better.
Right, sir. Thank you so much for joining us and partnering with us in this initiative. And we hope that together our journey on India Revival Mission continues. Thank you so much, sir.